What's up, Swing Trader Snacks here. We're going to jump in and do our watch list for October 24th, 2025. Friday, it is a big day. We got our first economic report to come out in weeks due to the U.S. government shutdown, and it's a big one. It's the CPI. A few days before the Wednesday Fed policy rate update, where it is expected they do cut rates again. So I don't expect, especially because Trump just replaced whoever's in charge of these reports, I do not expect a hot report. I expect to be in line or slightly beat expectations, and I expect a good reaction out of the market as we are at all-time highs. I think this could be what breaks us out of this 2-3 week consolidation sideways leg that we have been in and get us back into a trending market. But guys, before we jump in and do a bit of market breadth and I talk about some positions I may take today and that I have taken recently, just want to say, if you've not been here before, I trade the leaders in a trend backed by growing fundamentals. This is structural price action that repeats. We wait for them to go on discount, where I apply my bread and butter triple R setup. It is a retracement, reaction at or around our level, and a remount of the short term. This is something you will hear me repeat. This is something that does repeat in the market, and by applying options as leverage, it has got me up currently over 180% on the year, and I expect to do well over 200%, especially with this likely push into year end. So we've stayed fairly light the last few weeks, and I've been, over 75 to 80% cash throughout, and still ranging. We've gone into a slight drawdown. I was at 209% just a couple of weeks ago, and we're in the 180s currently. But look, guys, a hot open today should get us right back into the 90s, and follow through next week will have us back over 200%. Guys, if you're struggling in this market, you need help. I run a 60-day bootcamp where I lean over your shoulder, teach you my 6 models. Not only do I give you an edge that outperforms the market, I teach you proper risk management so that you're never one of these people who are worried about drawdown. We wait for pullbacks, okay? Drawdown is a part of the game. If you learn to manage risk properly, this is something you have allotted for. You're expecting, okay? And you're looking at it as opportunity, not risk, not danger. This is opportunity. We have been waiting for this. It seems to possibly be here. We have to see the reaction. We stayed tight on our risk. We did not overposition. We did not overtrade. We did not die by 1,000 paper cuts. Guys, I'm at over 75% cash, near all-time highs, ready to deploy, and I've added some long-term positions recently that I am quite happy about. So guys, consider that boot camp where I lean over your shoulder for 60 days. You work with me one-on-one, and we build you that edge you can leverage for the rest of your life. With all of that said, here is the quick list of the stocks I like today should we get a positive reaction to the CPI. This is the list of triple R's, and we have one gap down reversal here on WPM. The rest of them are triple R triggers. Here's a view of that at a glance. And with that, we'll jump back in and look at market breadth. What we've been talking about is clearing out of this range that we were in last week, which we have done and close outside of to the upside, obviously, here every day this week with a really nice strong close here yesterday, Thursday, and I was mentioning in chat that we'd really like to see a strong close, and then that report coming out an hour before the open today. If it's in line or slight beat of expectations, I do expect that we break out to all-time highs, in which case we will roll over into a risk profile B+. I've got to be there. I will put on some additional risk, likely put on some additional risk. Still want to see how the market opens and about the first 30 minutes. But look, I've got a list of around a dozen stocks, as you just saw on that quick glance there, that are setting up for triple R triggers. If we can break out here, I expect a bit of follow through because really we've been ranging for a few weeks now. So I think a breakout will have some legs here, and that is what we look for. We look to reestablish a trend in the indices and then go into our list of leaders and find our triple R triggers. RSP is still hanging out just below highs. At the top of that range, we would like to see this breakout as well. Tech is up near highs, and we also have IWM looking to get some legs back on this breakout that we had midweek last week. If we can, start to push up towards that and continue this breakout in small caps, that would suggest an appetite for risk in the markets, and that is something we would like to see. I'd like to get a little bit of a move here out of crypto, also signaling that risk on. So look, guys, all things are looking towards a possible breakout today, and if we get it, I'm going to very likely apply some risk. I did take a position in Hood would last week. Had this been a full-size position, I would have been stopped out, but it was only quarter size as I was a bit preemptive in taking this position. So I controlled my risk with size, and normally where I likely would have had this swing low be my stop, I allowed it to go and test the 50. On this day where we really sold off, we were starting to bounce a bit as I was looking to go to bed. I'm in Thailand, and I was like, look, I'm going to see how this thing closed, and I'll readjust or reassess tomorrow, which was yesterday, and we were pretty strong out of the gate and held up. So look, we're basically right back to entry, and if we do get that breakout in the market, it's going to be, in hindsight, a good decision. But the only reason I allowed for a little bit of a looser stop there is because quarter size position, and as you know, I break my portfolio into 10 units, and this is a quarter size position of a single unit. So very small risk on this thing. And with that, let's take a look here at XLF, the financials ETF. And yeah, I'd really like to see this guy get back over the 50. If we can do that, then I'll be very confident in my hood position. I put on a long-term position NBIS. The other night I had an order at 95.15, which got filled. And that seems to have been a pretty good starter position there. Then, guys, I'm accumulating path, I'm accumulating snow, I'm accumulating some lithium. I did get into rig last week down here at about 311, I think it was, 313, something around that, 316. Okay, 316. Another long term. I did get leaps on this one. Everything else I just mentioned is shares, but I did get leaps because the IV was very low and the contracts were cheap, right? So if we do get the if we do get the move I am looking for out of this in the next 2 years, this will be I was able to take a very small position relative to the portfolio, and I'll still have a meaningful return if we do get the move that I'm looking for out of rig over the next couple of years. So look, guys, things look good. We got the market internals here, which was largely bullish yesterday. We certainly did favor buy side. Nothing crazy, but a good look. And then we'll take a look here at the market breadth, and we've got the stocks over their 50 and 200 day moving averages are these two lines, and we've got the midpoint here. Both of those do look good. We had a very short stay underneath of the high versus low index here, stocks making new highs versus new lows. We wanted to see this get right back up over the zero line, which it did, and then we are still looking extremely bullish here on the weekly, and we've got our anchored VWAPs attached to different points there. If you guys want to know why I did those things, come hang out. And community is free. If you guys want access to the Discord where I am there daily, at least typing out my thoughts of the market, I'm there every single day. And then I go live a few times a week. I'll likely be live tonight. But I do suggest you consider joining my bootcamp. If you're struggling in this market, then you need a bit of help. You should be making money in this market. The last few weeks have been a little bit choppy, and I had a slight bit of drawdown going from 209% gain on the year down to like mid 180s. So, but this is looking like it's going to be back to the high 180s, possibly into the 90s by the end of the day if we get that good reaction. So controlling that downside. But guys, drawdown is a part of the game. You need to understand how to manage your risk properly. So if you want to learn my models that have me up over 180%, going to certainly be over 200% on the year. But not only my models, if you want to learn proper risk management so that you're not just making money, but you're keeping it and compounding throughout the year and over time, then consider joining me in my boot camp. But look, guys, things are looking, certainly leaning bullish here, and we just have to see the reaction to the report. I'm going to go through my list now of possible triple R triggers. NVIDIA, we have been watching for a while. I'd like to see it clear this 185 range. This is high up on my radar today. If we can get a push out of the market coming off of that report, then we've got a triple R trigger, right? We've got a strong company in a trend backed by growing fundamentals. We look for a retracement reaction. Remount of our levels is a triple R trigger, and we're looking to get one here through the 185 level on NVIDIA. I also like AMSC. Frankly, I like semiconductors. Let's take a look at that ETF really quick here and see exactly where the price action is. Yeah, pushing back up towards top of range. Great look here on the ETF, which is giving the juice to the rest of the stocks that make it up, right? NVIDIA's looking good. ALSIC's looking good. AMD, a bunch of them are looking fantastic. CRDO, okay? So I like AMSC, I like NVIDIA, I like CRDO. Here's AMSC here. We get a retracement. This is a shake and go. Another one of my models is a shake and go. go and a triple R trigger, right? So it is a shake and go setup with a triple R trigger. So we've got a strong company in a trend backed by growing fundamentals, showing an ability to respect structure. All right, so we have a retracement, reaction at or around our level, right? This was a triple R back here. It broke out, but it turned into a shake and go. So a breakout, fake out, shake out, pull right back into structure, hold structure. If you turn this over to the weekly, this is a beautiful higher low right here. So we're holding structure and we're getting a reaction off of our level. So we've got a shake and go with the triple R trigger possibly happening here today. That's pretty high up on my radar as well. CRDO is another one I do like the price action on. I think clearing this range maybe through about 152, 153 area. I think that's a green light on CRDO. Palantir is a flag that has been looking to break out. It's basing just below all-time highs. Looking to go here on Palantir. I don't really like the idea of trading flags, but you could also consider this a triple R trigger because we did pull back, hold structure, retracement, reaction off of our level, remounting the 9, and we're just below highs. I like that for a breakout if the market goes today. Dash is another one we have been looking at. Look, this list would be a lot longer, but we've got earnings. We're in the middle of earnings seasons, and a lot of these earnings are pretty tight to where, I like to play 3 days to 3 months. I like to have, at least 3 days to 3 weeks before earnings if I'm entering on my main 6 models. I've tried to keep most of these within at least early to mid-November as earnings. Otherwise, there'd be a lot more on this list. Like SoFi, for example, looks fantastic. I just can't take this because earnings is just so close. It's next week. All right. But, I think if it does break out off of earnings, we're going to have triple R triggers as this thing looks to put in. It is putting in an IPO cycle, but another one of my 5 continuation models is an IPO cycle. And the idea being that when it does put in a cycle, that the price range of the IPO cycle will repeat to the upside within that time range. Go look at the leaders and see how often this happens, or come join my boot camp where I show you a couple dozen of them. And we do play this quite often. SYM is another one that I really do like. This is a box breakout, I believe. It could be an IPO cycle breakout, but box breakout, same idea as I just discussed with an IPO cycle. I believe this is an IPO cycle. It's a box breakout. The IPO cycle was back here, right? And you can see how it repeated that to the upside. So this is now a very large box breakout, and we've got the preemptive positioning back here is how I like to play those. I did not do this. Someone in boot camp, Stuart, I'm going to just say your name. Dude, hell of a trade, man. Let me know if you did end up sizing up for the box breakout play, or if you just took profits. I know you were talking about doing so up here. You were, at or around or maybe slightly above 100% on those contracts. Great trade, brother. Anyways, look, we've got a beautiful box breakout retest, which is where I like to load up to full size. If this guy gets back over the 9, it's a fantastic entry. And then we've got App. App just had a big pullback off of highs, and it's a retracement, reaction at or around our level, and a remount of the 9. Guys, this is worth a shot. You've got absolute, undeniably clear risk reward in favor to upside here, right? You got a 2-to-1, obvious risk just below this swing low, the gap fill. You don't need to be in that. If this breaks this, Wednesday's low, Tuesday's low, just get on out of it. But you've certainly got some upside potential here on one that does like to get squeezy. I like this, and we've got just enough time, I believe, before earnings to realize that move, right? I would get the contract, Friday the 14th would be the contracts I chose there. You could maybe argue, Friday the 7th would be long enough. The 7th or the 14th would be the contracts I took there. Probably the 14th. And then we've got CEG, another one that broke out and is pulling right back into structure. A remount of the 9 on this does look attractive. And we've got Rocket Lab, a recent runner, giving us our retracement reaction at or around our level. Back over the 9 here on Rocket Lab is attractive as well. FUTU is one I've been looking for an entry on for a while. And guys, I want to just go ahead and say Moomoo is FUTU's trading platform. I am impressed. I have been playing around with this thing all morning, and I'm not going to lie to you, I am very impressed with this platform. Maybe more on that later, but I think I might be adding this to the arsenal of tools. They are doing a lot here that, again, I really am a fan of. But we'll cover that another day. But look, guys, we got a retracement reaction at around our level, and we're looking to remount. The 50 is what I would like here. But if we look at this on the weekly, we've also got a weekly trigger here below this cup and handling of all-time highs. I like this just off of the weekly as well. If you want to be slightly preemptive on the daily, but maybe do smaller size, because realize you're buying right into daily resistance with the 50 right there above. Maybe go quarter, half size on the weekly trigger, confirm, wait for like a little bit of a shaky day, go up to full size, and you are are loaded up for a possible all-time high breakout on an IPO cycle. It is an IPO cycle, isn't it? Yeah, beauty. Well, I mean, the IPO cycle was back here, right? But you know, when the volume really came into this thing, now we're putting in a cycle. But what it is a cup and handle on the weekly. Absolutely beautiful price action here, and we're loading up below all-time highs. I think a bigger trade is coming here in FUTU, and I would like to position for it. And then we've got IREN. All of these data center plays have pulled back. I showed you that I bought NBIS the other day. That shares a longer-term idea, longer-term account, but I do like the possibility of contracts here on IREN. We've got a strong company and a trend backed by growing fundamentals. Our first real stay below the 9, and we're getting a reaction at around our level, remount of the 9. I will consider some contracts here on IREN. Here's another example of an IPO cycle, and guys, I mean, these things repeat, all right? These things repeat. I told you that you're looking for the price range to repeat within the time range. This did it in 2 months. And I bet there was an entry. Yep, breakout, pullback, held structure. There's your entry coming out of an IPO cycle. I mean, just absolutely beautiful. And then we've got TARS, one that I have not traded yet, but this is attractive as we are doing a box breakout. So very similar to the IPO cycle, you get sideways consolidation for 6 or more months, and then you get a break out of it. So look, we broke out of this guy. You could have loaded up a little bit before. You haven't really had a chance of entry after, but this could be that right now where you're getting a retracement reaction at a runner level. A little bit deeper wouldn't have, you know, upset me here, but if this guy is strong enough that it can't even pull back and retest the box breakout, I think the first triple R trigger coming out of a box breakout is very attractive. For example, RMBS. This is a box breakout, the most recent one that I played. Thank you, Dima from Bootcamp. Not afraid to say your name either. Thank you, brother, for this, bringing this to my attention. I did take this trade, made it over 100% on it, thanks to you. And this is a textbook box breakout play. You want 6 months or more of sideways consolidation, creating your box that you look to load up preemptively to bounce out of, and then a pullback, which this one also has not done, just like what was that we just did. TARS really can't even convince itself to pull back and retest that box breakout zone is a sign of strength. I was looking at this yesterday. I really did want it, but I refuse to add any more risk for it. Well, and then also you've got earnings. Is that today? Monday earnings. Eugh. Well, anyways, the point is here is when these things break out of the box, they really do tend to run. This almost put in the box cycle in the first 2 weeks of breaking out of the box, and you've got your first pullback getting bought up, but you know, you definitely can't do that going into earnings. But let's see the reaction to earnings. Two things could happen. It could pop up, set up more triple R's, or if it pulls back and holds that box breakout zone, then we would look to buy it back over the moving averages. So we'll definitely have an eye on RMBS coming out of earnings. The semiconductor sector is hot. Guys, there's a lot to watch today. I am excited, and I am going live. Bootcamp, I will see you tonight for the New York Open. Stay safe, manage your risk. Let's go make some money. I'll see you soon.